My name is Ketty Waller and I'm the Head of Public Practice and SME, and it's my pleasure to welcome you to our session today. I would first like to take a moment to acknowledge the traditional owners from around Australia and pay my respects to elders past, present and emerging. I extend this acknowledgement to all Aboriginal and Torres Strait Islander people who may be joining us today. It is now my pleasure to introduce Professor Dale Pinto to introduce the session. Thank you, Dale.
Thank you, Ketty, and a very warm welcome to everyone. I'm Dale Pinto. I'm currently a Board Director and Deputy President of CPA Australia. I'm delighted to be here to formally welcome you on behalf of the Board for today's Tax Time Update and Tax Year-End Resources webinar. And it's really great to see such a good response to today's webinar. I'd also like to begin by acknowledging the traditional owners of the land on which we meet today and pay my respects to elders past, present and emerging, and extend this welcome and respect to other Aboriginal and Torres Strait Islanders who might be present. I'd also like to acknowledge we're joined today by my fellow board colleague, Louise Cox, FCPA. Welcome, Louise. And I'd like to thank today's webinar hosts, Chloe Stefani and Katrina Benjamin, our presenter, Eleanor Casapides, CPA Australia's Senior Manager of Tax Policy, our presenter, Simon DePoli, More Australia's Director of Business Advisory, who's assisted today by Jimis Nissen and Laura Dorgan, and our moderator, Ketty Waller, who you've just met, CPA Australia's Head of Public Practice and SME. Today's webinar will provide an overview of our year-end resources for you, our members, including the Tax Toolkit and CPA Australia's professional resources. You'll find these resources on our recently relaunched website, and they include the following. First, our 2021 tax tips. Second, a series of checklists, tax checklists for individuals, companies and trusts. Third, client letters and work papers. And fourthly, links to relevant in the black and in practice articles. It's also a great opportunity for you to ask questions of a panel of experts we have today who represent the profession on tax matters about preparing client tax returns. So in concluding, CPA Australia is always interested in hearing more from you, our members, about how the organisation can continue to make positive changes that provide you with increased value and service to best support you as a practitioner and also your clients. I encourage you to participate in the evaluation survey for this event at the end. And to our CPA Australia members and their guests, thank you once again for participating today. Really looking forward to the session and please enjoy it. Thank you.
Many thanks, Dale. I would now like to take a moment to introduce our speakers for today's webinar. Firstly, it is my pleasure to introduce you to Eleanor Casapides, who is our Senior Manager of Tax Policy here at CPA Australia. Has many years of experience in tax, including previous roles at the ATO. It's also my pleasure to introduce you to Simon DePoli, More Australia's Director of Business Advisory, who has more than 15 years experience in business advisory. Simon has acquired a range of experience from managing within one of the Big Four accounting firms and within boutique tax firms. Simon specialises in business advisory services, international taxation, and financial accounting. He also has extensive experience in the agricultural sector. Simon's experience has been acquired across several states of Australia, as well as internationally, having previously held management positions in Hong Kong. During the presentation, please send your questions through to the Q&A section of the presentation that you'll be able to see on your right-hand side. You'll be able to click on that little icon Q&A and all your questions can be posted there, and we'll be monitoring those through the session. And we will do the questions at the end of today's session. If you have any technical questions or queries, please also send that through to the chat and it will be able to assist you in the background. It's now time to commence our webinar and it's my pleasure to hand you over to Eleanor. Thanks, Eleanor.
Thanks so much, Ketty. I will be talking about the regulatory environment and focus areas as a bit of a scene setting and introduction to Simon, who will then go through a little bit more of the technical details, and then we'll do a walkthrough of the resources that are available for members this tax time. This is a summarised version of some of the information we presented in an earlier webinar, but it is always good just to refresh and refocus on some of the key considerations of being a tax agent, particularly at tax time. The first slide is really around the TPB and the considerations as a practitioner when helping people with their tax time returns. These are not new things. Reasonable care, making sure that if you're using cloud computing that you have your client's consent. Security and fraud, I think, you know, it's all over the news in terms of what can happen when things go wrong, and there are obligations on tax agents, particularly because you are dealing with such confidential information. It is a good time to check before you go into all of the processing of returns that all of your protocols and procedures are satisfactory. And exercising supervision and control. I'm sure all of you have read the exposure draft information sheet on supervisory arrangements. And really what that is trying to do is to bring up to date some of the working arrangements and making sure that where you have a tax agent registration, that those under your supervision and control are doing the right thing. Whether this is actually physical oversight or you're using processes or risk management procedures to mitigate any incidences or risks, they are things that you do need to look at, and it's always good to have them set up properly at the beginning of tax time. One thing on reasonable care, the ATO does understand, obviously, that it's not an audit or assurance engagement. As a tax agent, you're not necessarily required to cite every single document. However, the TPB guidance does talk about, you know, if things have changed, are you asking enough questions where there is a claim that doesn't seem quite right, or from your experience or knowledge of other clients in similar situations, it seems a little bit odd. There is a positive obligation on you to take reasonable care and to take steps to ensure that you are going through sufficient questioning to assure yourself that what is going through the tax returns and the advice that you're giving has had that level of reasonable care applied to it. Cybersecurity, there are resources available. We acknowledge that they are a bit scattered and they are very principles based, and quite often they're in a language that isn't really accounting language or tax language. The government and CPA Australia, we do work to try and make that as clear and simple as possible. But really basic things like making sure that you're running all of the updates, ensuring that you have actually got some form of security protocols in place, things like that in your practice are really, really important. But more importantly, what is the ATO looking at this year? When you are going through and giving your tax advice, helping clients prepare for their tax returns, I know that CPA Australia, we have gone out there saying not only is it a good opportunity to look at the year past when preparing the tax returns, but also to look at the year coming and making sure that your clients are set up, be they an individual with just basic record keeping requirements or businesses with more complex transactions and structures, just to make sure that they are doing things in real time, contemporaneously, and that when the time comes for the ATO to look at things, which they are getting faster and faster at doing, your client is in the best position and you are in the best position to answer any queries from the ATO in an open, transparent and efficient way. Their main weapon, particularly in the individual section, is pre-fill and data matching. So obviously through STP, the income statements, you've got interest and dividend, all of those things are pre-filled. And what the ATO does look at is variation. So if you vary on behalf of your client a pre-fill amount, make sure that it is correctly varied and that you've got the documentation to support those. The other thing that they will be looking at is discrepancies from previous years. So where things are either increasing or decreasing quite substantially, or things that are not necessarily aligning up as they would expect. They're the sorts of things that they look for. And obviously the data matching protocols, the ATO's issued a whole range of them quite recently to update them through to 2023. At the moment, they're not real time, so these come in a post-lodgement environment. Cryptocurrency, residential rental property information. There's a whole bunch of stuff, Airbnb, Uber, e-commerce kind of websites. They're the sorts of things that the ATO may come. So it's good to be proactive where your clients talk about perhaps doing some side gigs, or, you know, they've had to do different things to make ends meet because of COVID. Just ask a few more questions, because that information may actually come through to the ATO post-lodgement, and you don't want your clients to be caught out. The ATO has also signalled that it has recommenced review and audit activity that was paused last year due to COVID, also progressing on their lodgement and debt actions. The Inspector General's report on the ATO undisputed debt came out, a couple of weeks ago. And what was really interesting is the very low number of payment arrangements that are in place to cover tax debts. As agents, you know, there's a range of responses in terms of how involved you want to get into relation to debt management. However, it is better for clients, it is better for businesses to be under a payment arrangement, because it avoids the escalation of any kind of further action from the ATO. If your client's debts are above $100,000, also be aware that there will be the new credit reporting scheme. I'm not quite sure what the formal name is, where if they've got debts above $100,000, which are not in a payment arrangement, that information will now be sent to credit reporting bureaus and be made publicly available. So certainly it's an opportunity to have those conversations, particularly if they have a liability, not just income tax, but other taxes at the end of the year that they're struggling to cover. From a lodgement program, we know at May every year, particularly last year and this year, there's been a lot of stress. The ATO has been clear that that blanket extension approach is not a method that they'll be utilising as sort of a BAU thing. What they are encouraging agents to do is to utilise agent assessed deferrals, to speak to them. I know a lot of members were very stressed about the 85% lodgement threshold. There is a recognition from the ATO, and they have messaged to say, don't worry, just keep going through it. Late lodgement or underperformance from that 85% benchmark for 2020 tax returns will not affect your lodgement program for 2021 tax returns. They are available to talk, and anything that you want to discuss with them in relation to your lodgement program, they do have dedicated staff available. Last year, COVID-19, a lot of it was focused on JobKeeper, early access to super. This year, they have signalled that depreciation incentives and loss carryback will be an area of focus, and they have issued some communication around what they're concerned about. In particular, for the loss carryback, make sure if you've got clients claiming that their franking accounts are actually properly calculated. The ATO obviously will have franking credit data, and they will be able to do sort of a rough and ready calculation to anticipate who would be entitled, but make sure, of course, that your clients' books on the franking account side of things are up to date and correct, so they're claiming the correct amounts. Work-related expenses, work from home. There is sort of this narrative going on at the moment, why isn't everyone just using the shortcut method? And I think it's really about ensuring that you understand the expenses that your clients have incurred working from home, and making sure that you're maximising the deduction available to them, and that they have the appropriate records. So for some clients, they may not have the right records, so shortcut might be the only method available to them, whereas for others who have spent a lot of money, do have substantiation, can apportion things for private use and all the rest of it, they might come out ahead using a different method. Travel and motor vehicle expenses are expected to reduce. Obviously, different parts of Australia have been affected by COVID in different ways, and the ATO will be adjusting its analytics to account for geographic and industry-based differences. So they will be using sort of that analytical tool to compare like with like, and they have a general expectation about what they might see coming through from taxpayers. I mentioned irregular income, sharing and gig economy. Of course, for many who have perhaps taken up some new activities, there is that hobby versus business. And then for others where, you're getting fee for service, it's accessible, it's not a hobby necessarily. So those are the issues that you may need to raise with your clients. And certainly some people might have started something off as a hobby, and COVID has actually resulted in it taking off and becoming a business. And there might be some issues associated with that. So again, it's just around having those conversations with your clients. not only getting their tax return for 2021 done, but also setting themselves up for the future. Investment properties on ATO law, the ATO has archived all of its COVID-related questions, and there are some responses in relation to investment properties and also motor vehicle expenses as well. So it really is an adjustment where the use has changed. Was it available for use during COVID? Did anyone use an increased percentage for private purposes? The ATO will be looking out for those sorts of changes. Personal services income, we have the draft ruling out. I know paragraph 40 with its part 4A reference has caused some concerns, but more broadly, it really is just a consolidation of previous rulings. It does go to personal services business. The ATO has indicated in that small business PSI space, it continues to observe when it goes to do reviews or audits, some confusion and some issues around the application of the PSI rules, or perhaps also where a decision, or you've gone through the process and gone, right, it's PSB, it's fine. And there are conversations around, well, is it really, and are you looking at things the right way all the time, particularly when you're looking at contracts and things like that. Even if they do get through the PSI, PSB rules, if they are a professional firm, you've got PCG 2021 D2, which is the allocation of professional firm profits. So this goes beyond that regime to basically say, look, are you allocating profits from professional services, whatever that might be defined as, appropriately? So that might as well be something to consider. The ATO hasn't finalised its views yet, and it is just a PCG. It's not a ruling or a practice statement. But again, that might be something just to have a read through and think about, both for yourself as a practitioner in a practice, but also for those of your clients who may be operating professional services and professional firm businesses. The ATO has also signalled private use of business assets. You know, it's a perennial issue, but I think that with the introduction of STP for closely held, you've got clearer messaging around 7A. They are doing consultation on a few aspects of that, and Section 100A. It really is what might have been administrative practice 10 years ago, 15 years ago. There is this transition, I guess, that needs to happen where all of those payments, it's not just about journal entries, it's also about documenting resolutions, things like that. All of it should be in place in case the ATO does come and ask questions. For them, it continues to be an issue that pops up, and recognising that for some businesses it's a challenge, and for agents it's a challenge because people just take money out of their business without even thinking about it. How do you educate them, and how do you get their books and records in order to make sure, and not retrospectively, to make sure that everything's in place as it should be. So they're the main things. Crypto. Had a bit of fun talking about crypto. I think that, you know, we had some massive prices earlier this year. We've also had some big falls, and a lot of Australians have actually got involved in this. It is a capital asset. Capital gains and losses apply, and record keeping. I think a lot of people have sort of gone into it, and the only thing they're keeping is their encryption key. They need to keep a little bit more than that. So just again, being aware that the ATO is getting information from exchanges on that. On risk detection, real-time analytics, you might get refunds stopped for a review. There might be post-lodgement reviews, automated assessments, amended assessments when new information comes to light. The other thing for tax agents is that the ATO does monitor behaviours by tax agents. So you might have a tax agent with 500 clients here and 500 clients there. They're broadly kind of the same. What the ATO does is actually compare the types of behaviours that they're seeing. And also looking for clusters, and they've got quite advanced approaches to doing that. What that means is that as a tax agent, if your claims or your clients' behaviours are a little bit different or out of the ordinary, there is an increased likelihood that the ATO might come and look at those taxpayers. And for some, it might mean that the ATO will come and ask about a range or a number of the returns lodged by your practice. So again, that relates back to that supervision and control requirement from the TPB, taking reasonable care and making sure, you know, that everything is right when you're lodging these tax returns. The ATO and the TPB are also working closely together. And where it comes down to tax agent related matters under the TASA, the ATO does have a process to refer those to the TPB, and I think we've all seen increased activity from the TPB as well as at the AAT about some of these tax agent cases. Just something to be aware of. And then outside tax time, tax returns for income tax purposes, we've also got the taxable payments annual reports due 28th of August. The ATO said last year there was quite a significant delay, and that many small businesses ended up doing it when they lodged their tax return, which might have been in March or May this year, which is too late. The ATO, while it is a relatively new regime and the new industries have only been in there a year or so, they are really pushing to get those on time and to get those done. So please make sure that your clients are aware of that and get that in. Single touch payroll, those closely held need to be reported from now, 2 weeks ago. So make sure they're on. SGC, sometimes when you're doing some of the reconciliations at the end of the year, you'll find that there are issues with SG payments. It's not just about making the payment, it's also about lodging the SGC forms and details with the ATO. They are currently reviewing their practice statement in terms of the application of Part 7 penalties. And the most important thing, though, is to get that rectified, and as they look to review that PSLA, they will then determine the best approach to any penalty remission or reduction, and then apply that both for future cases as well as they've indicated retrospectively. So that's just something to fix up. The ATO and TPB also issued some guidance on client verification. While not mandatory right now, essentially what it is, it's like a 100-point check. Just make sure that with new clients that you do know who they are. That guidance does set out some processes and some rules to follow, some documentation. Please don't hold copies of the actual identification documents, linking back to that whole cybersecurity issue, but really about showing that you have the processes and the lists in place to say, yeah, we'll check these things. This person is, as best as I can tell, the person who they say they are. Director ID is coming, so modernising business registers. There'll be a body of work for those who are also ASIC registered agents to help their clients through Director ID. And there's a broader conversation about that interaction between tax agents and registered ASIC registered agents and the new business register regime, who does what accesses, and all the rest of it. Obviously, for director IDs, each of those directors will need to get a MyGov ID or follow an alternative paper-based process, but they have to verify their own identity themselves. Their tax agent can't do it for them. I mentioned the updated data matching protocols, and STP Phase 2, I think, starts January next year. The message from the software providers is just wait, they're working on it, and they'll keep you in the loop about things that are coming. So, tricks and traps. Don't lodge too early. We're 2 weeks in. Even the ATO went out this year and said, hey, don't lodge too early, which I think is actually the first time I've heard them publicly say that. Use the pre-fills, compare with the previous years, don't copy and paste the pre-fills. That's a huge signal to the ATO that something's not quite right when you're cutting and pasting numbers. I've gone through the list of what's catching the ATO's attention this year. And, you know, when we speak with members, online services for agents or your practice management software, correspondence and client comms continues to be a real challenge, not just for the ATO, not just for the tax agent or the taxpayer, but for everyone. So really it's around your practice management, how you select the preferences, how you determine what your client receives directly. Ultimately, the idea is that a taxpayer has access to the correspondence that is issued to them. Now, whether or not it's dormant and sitting in sort of their inbox, but it actually is notified to the tax agent, that's really where the conversation takes place. And really, it's this push by government to make sure that they're being transparent with taxpayers and making sure that people can see what's being sent, which in and of itself is not a bad thing. The problem is, of course, when a taxpayer expects the tax agent to manage all of the comms and gets a little bit confused when they're getting these notices. So that's something we continue to work through, but to the extent that you can use OSFA to control and manage those risks and those situations, that's the best way to do it. And obviously there are things on there that are quite useful. And that's it from me. So with that, I will hand over to Simon, who will go through the interesting stuff on changes as they relate to client tax returns. Over to you, Simon.
Thank you for that. Hello, everyone. It's great to be here. There's been a few changes, obviously, throughout 2021, and of course, a lot of it comes down to COVID. And for all of you who are in lockdown, please hang in there and stay safe. We're certainly, being Melbourne-based, we are certainly fully aware of the impact of lockdown. So hang in there. So today I'm going to cover a few of the main changes and touch on some of the topical issues that have occurred throughout 2021. So firstly, I'm going to go through the depreciation changes. On the 6th of October 2020, as part of the 2021 budget, the government announced it will support businesses and encourage new investment through a temporary full expensing incentive. So businesses with an aggregated turnover of less than 5 billion can immediately deduct the business portion of the cost of new eligible depreciating assets. The eligible new assets must be first held and first used or ready installed to be used for a taxable purpose between the 7:30 on the 6th, which was the announcement time, and the 30th of June 2023. The cost of improvements for the eligible depreciation assets are also eligible for the temporary full expensing if these costs incurred between 7:30 on the 6th of October, so budget night, and the 30th of June 2023. For businesses with an aggregated turnover of less than 50 million, temporary full expensing also applies to the business portion of eligible second-hand depreciating assets. Corporate tax entities unable to meet the $5 million turnover test can still be eligible for temporary full expensing under an alternative test. An entity can make a choice to opt out of TFE for an income year on an asset-by-asset basis. The choice is unchangeable and must be in an improved form by the day that the tax return is due to be lodged and to the income year that it relates to. So medium and large size businesses with an aggregated turnover between 10 million and 500 million can continue to deduct the full cost of the depreciating asset under the enhanced instant asset write-off if the depreciating asset is not eligible for the TFE, or if the entity has opted out of TFE for that particular depreciating asset. As part of the budget as well, the time in which the asset must be first used or installed ready for use to be eligible for the enhanced instant asset write-off has also been extended to 30 June 2021, which was previously 31 December 2020. It is important to note that businesses with less than $10 million turnover must apply the simplified depreciation rules in order to claim the enhanced instant asset write-off. Finally, where the cost of the eligible depreciating asset is not eligible for the TFE or the instant asset write-off, consider whether the entity is eligible for the accelerated deduction under the backing business investment accelerated depreciating measure. A lot of words there. Similar to the instant asset write-off, the time in which the asset must be first used or installed ready for use to be eligible for the business backing business investment has been extended to 30 June 2021. The amount an entity can deduct will depend on whether the entity is using the simplified depreciation rules. It is important to note with simplified depreciation rules that the lockout in terms of opting back out and then back in has been extended until 30 June 2022. The loss carryback tax offset. Once again, this is obviously in relation to supporting businesses that have had it tough during COVID. So eligible, as part of the 2021 budget, the government announced a loss carryback regime for supporting businesses and encouraging new investment. And Eleanor touched on this in her presentation also. Eligible companies with less than $5 billion turnover in a relevant loss year can carry back losses made in the 2020 to 2022 income years to a prior year's income tax liability in 2019 to 2021 income years. The amount of tax offset is limited to the lesser of the income tax paid previously and the franking account balance. And Eleanor touched on this earlier. That's very, very important that we ensure that franking accounts balances are in check. As part of the 2021-2022 federal budget, it was announced that they will extend the loss carryback measure to allow eligible corporate entities to carry back tax losses from the 2023 income year to offset previously taxed profits as far back as 2019. Expansion of the small business concessions. Businesses that were not able to access immediate deduction for prepaid expenditure because of their turnover was more than 10 million, that's now been extended to 50 million. They can now access immediate deduction for both prepaid and certain startup expenses. Some of the startup expenses include costs of obtaining legal or accounting advice as to how they should structure their proposed structure and how they should operate their business. From 1st of April 2021, these businesses with a turnover with less than 50 million can also access the FBT concessions, such as the FBT car parking exemption or the FBT work-related device exemption. From 1 July 2021, businesses that are not small businesses because their turnover is $10 million or more, but less than 50 million, can now access these small business concessions. Simplified trading stock rules, whereby if there's been a small amount of movement throughout the year compared to the opening balance, the PAYG instalment concession and the 2-year amendment period. The 2-year amendment period is actually quite important because obviously that's half of what the 4-year amendment period, and then also the excise concession. Main residence. So, as mentioned last year, amendments to the main residence exemption were enacted to prevent foreign residents from claiming the exemption. There were transitional rules available to 30 June 2020, allowing the exemption to apply to non-residents if the property was owned pre-9 May 2017 and sold by 30 June 2020. COVID-19 has caused some issues with allowing properties to be sold by 30 June, and notwithstanding attempts to get this date extended, this did not happen. Remember, it's the contract date that's important, so that the fact that the property has not settled is not an issue. So from July 2020, there are 3 main ways in which a foreign resident can use the exemption. Either the foreign resident, their spouse or their child who is under 18 years of age has a terminal medical condition, their spouse or their child who was 18 years at the time of their death dies. The CGT event involves a distribution of assets between foreign resident and their spouse because of their divorce, separation or similar maintenance agreements. However, in the event that the foreign resident returns to Australia and establishes Australian residency prior to the sale, the main residence exemption applies. This is subject to the 6-year absence rules and the other general rules. So therefore, with foreign residents, it's incredibly important around timing, around selling property, and this obviously affects a considerable number of expats, and particularly with expats returning, a lot of expats returning due to COVID, it's certainly worth discussion with your clients. Working from home expenses. So the shortcut method, as Eleanor mentioned before, was announced as part of the COVID-19 measures and allows a deduction of 80 cents per hour. Originally, this was only available between 1 March and 30 June 2020, then extended to 30 September 2020, and has now been extended to 30 June 2021. Just to note that where the 80 cents per hour method is used, the number of hours worked needs to be recorded, i.e. in a timesheet, a roster, a diary, or some other document that shows the hours you worked. If a different method is used, you must keep a record of the number of hours worked and a record of those expenses. Also, as part of the 2021 federal budget, the JobMaker hiring scheme was introduced to incentivise businesses to take on additional young job seekers. All payments under the JobMaker hiring credit scheme are assessable as ordinary income. Normal deductions apply for amounts paid to employees if those amounts are subsidised by the JobMaker hiring credits. A bit typo there with boot. With JobKeeper and cash flow, any JobKeeper amounts received are assessable income of the entity. Of course, being a subsidy, it really was just to replenish businesses' cash flow, to that, then passing that on to employees. Deductions for payments to employees are available, provided the general requirements for deductibility is satisfied. Any cash flow boost amounts received are treated as non-assessable, non-exempt income and are therefore not taxable to the entity. Considerations must be made to the implications for the entity and the type of entity paying this amount to shareholders or unit holders, i.e. as a potential unfranked dividend or as a trust distribution to which CGT event E4 may apply, i.e. if it's a fixed trust. So that's really, really important to consider, particularly when there's been family-owned companies where the shareholders are taking out the money. It is really, really important, and they've received that bonus. Pandemic leave disaster payment provided by the government to support individuals in certain states who can't earn income because they are become isolated or quarantined at home or are caring for someone with COVID-19 are also accessible. State and local government payments. So there's been a lot of activity regarding obviously support packages from the different state governments, and to be honest, they vary in terms of their treatment. Particularly, for example, in Victoria, there were some of the grants have now become nanny, so non-assessable, non-exempt income for tax purposes, but some of the earlier ones were not, despite them having very similar eligibility in terms of the grants. So it is certainly important that if your clients have received any grants, that you do check on what the tax implications there are on those, and if because becoming nanny income, that you will need to consider the type of entity similar to the cash flow boost in terms of how that gets treated upon if it is taken out of those entities. So the service entity arrangements. So that draft ruling is obviously well out and about, and everyone in accounting firms is certainly talking about it in terms of the impact that it will have on principals for accounting firms or any service entity for that matter, but particularly for considering the audience here for accounting firms. So on March the 1st, that was released, and it sets out all the proposed, at this stage, proposed compliance approach to the allocation of profits by professional firms. The draft PCG explains how the ATO intends to apply compliance resources with the allocation of professional firm profit, particularly with regards to the IPP. And what is important there as well is that it talks about professional firm profit. That differentiates to fixed salary and wages, not fixed draws, but fixed salary and wages that some partners, particularly with company structures and company firms, may be taking out. It only relates to the actual profits. So when finalised, the draft PCG will apply from 1 July. It's interesting, we're already on the 14th and it still hasn't been finalised. And this will supersede the previously issued guidelines regarding the allocation of profits within professional firms, which was released in October 14 and subsequently withdrawn in December 2017. And we've kind of been in this limbo until recently with this draft, with the draft PCG. So in order to rely on the PCG, there are 2 gateways as well, which are very important that a taxpayer needs to satisfy in remuneration and for the profit distribution of a professional firm. So the super guarantee amnesty. Finally, The super guarantee amnesty ended on the 7th of September. The amnesty related to quarters starting from 1 July 1992 until the 31st of March 2018. If an employer qualified for the amnesty previously unpaid, including nominal interest that is owed to employees, was payable. However, the employer will be able to claim a tax deduction for the SGC amounts paid to the ATO that was not required to pay the administration component or the Part 7 penalty. September 2020, the ATO issued Practice Statement Law Administration PCLA 2020/4, which deals with the remission of additional SGC. It is noted that the recent legislative amendments restrict the ability of ATO officers to remit the additional SGC. It is therefore important that all employees ensure that superannuation guarantee requirements are met. Review of resources.
Great, thanks, Simon. Really great insight into some of those areas. I'm just going to take everyone through some of our resources now that we have just to support you through this tax time and let you know where they are and how you can find them. So first of all, you may have actually seen, and hopefully you've all seen, we've had a updated website, went live a couple of weeks ago, and it's very different and it's a lot more intuitive, and hopefully you're finding it very easy to use and find information. So all of the tax toolkits and resources I'm about to talk to you about can be found in the tools and resources section of the website. So on the left-hand side of your screen, you can see I've taken a snapshot of the IA or the design of the website. And if you go to tools and resources and scroll down to taxation, and when you click on that, you will come to the right-hand side image here, which takes you through all these areas. Now, it is really important that when you go into this area that you do log in as a member, because most of our tools and resources that are available for tax tool time are only available to members of CPA Australia. So if you haven't logged into the website as a member, you will not see all of these resources. So please make sure you remember to do that as you jump into the website. Now, we do have what we call tax tips, and hopefully you've seen Eleanor, who's been very busy in the last 6 weeks in the media, talking and going through a lot of the tax issues and things to think about and getting ready for tax time. And Elle's actually gone through and prepared a number of tax time tips, it's a bit of a tongue twister, tax time tips in different areas. So for students, for individual taxpayers, and for small businesses. So if you're looking for some guidance, you may even want to share with some of your clients just to talk through some of these areas. You can jump onto that section, and on that landing page, you will find that there is a section for tax tips, and all you need to simply do is click on that little box, and that will bring you to the screen you can see on this slide. Now, I'm just going to hand back to Simon for a moment, who's just going to talk us through some of the other resources that we have available that More Australia's helped us prepare for you. So over to you for a moment, Simon.
Thanks, Katie. Yeah, so in terms of the resources, we've got a series, provided a series of checklists for the members, including, and these have all been updated to reflect a lot of these, the changes that have come through that were discussed today. Particularly, there's a lot of thresholds that have changed, and obviously some of those depreciation measures. Also reflected is some of those real specific areas regarding residential properties, because as you know, that's really on point for rental people, particularly for clients with rental properties at the moment. SMSF's still highly regulated, so it gives practitioners as well that information that's required, particularly if you're still continuing to do your SMSFs in-house. Div 7A, it never goes away, we know that. And one thing that is important is that with the Div 7A UPEs, we're getting up to that first anniversary as well. So it's certainly timely that protect the members here, look at those and ensure that they're complying with all those requirements. And PSI and PSB self-assessment, which Eleanor touched on as well, is very, very important. Of course, FBT, as complex as ever, as we know. There's also a substantial amount of client letters that are provided for the members to use, including regarding commercial debt forgiveness, dividends, Div 7A, and these details, some of these letters are detailing a lot of these changes that have come through in recent times. Service entity as well, so regarding that PCG, how it's likely to affect them once it becomes fully law, and then you've got some foreign employment income issues, and then there's a few of the recent changes to ESS. GST property issues continue to have complicated matters regarding commercial property, particularly regarding margin scheme, recoupment of company losses. So, that obviously includes the loss carryback and how that's going to impact the company losses and any strategies that you might have going forward. It's just about triggering that with the client to enable the client to think of that from their own perspective. Then we have some salary packaging information, which, depending on what sector they're in, particularly in the NFP space, is always a really relevant matter for employees and those NFP clients. Small business entities, once again, I mentioned that a lot of the thresholds have changed regarding and that definition around what a small business entity is. And it's important that, particularly when you're looking at things like small business concessions, that some of the thresholds haven't necessarily changed, but then small business entities, particularly regarding depreciation, have. Taxation of trusts, the TFN withholding regime, and the ever complicated transfer pricing as well for international clients.
Thanks, Simon. We have a few other letter templates that are available for you too, covering different areas such as PAYG, pay-as-you-go, BAS, and instalment activity statements. So again, these templates are available on the website, and they're there to help you communicate with your clients on these different issues. And essentially, provide a framework for you to actually go through and articulate and go through some of these areas, but again, modify as you need so that it is being relevant and personalised to your client. We also have a number of ATO correspondence letters, so things to help you again communicate to your client on things like their income tax assessment, reminder about different things and lodgements. The 2021 version of these letters will be available on the website early next week. So we still have all of the historical tax toolkit resources on there. So you'll currently see 2020. All of the 2020 letters are being updated and will be on the website early next week. So if you're looking for those, jump back in on Monday and you should be able to see them. It was also be a little bit remiss me, sorry, I should say that we do have, as well as Simon and Eleanor, some other experts sitting here looking at our chat box. So you have a wealth of information here. If you have questions or anything that you would like to ask, please don't forget to pop your question in the Q&A section of this webinar, because we will be going through those questions very, very shortly. And it's your real opportunity to ask anything, given we've got a wealth of expertise on our panel today. So tax work papers, again, are really important for your documentation and for your clients, covering all of the normal areas that we have on there. So franking account, livestock, prepayment schedules. Again, they're all being set up so that they've got formulas in there to help you with those calculations and help you with those substantiation areas. So in addition to that, we do have the client substantiation letter and declaration on that page, as well as a tax preparation client letter that you can use and send out to your clients as well. Now, in addition to all of our templates that we have available to you and the work papers, we have a range of professional development support that is also here to help you out during this tax time. Hopefully you may have heard, and if you haven't, I'm really excited to be able to let you know that our monthly tax updates and our monthly special tax updates are now complimentary to members of CPA Australia. So hopefully you've seen these webinars advertised in the past, and hopefully you've even joined being part of them. They were a paid PD resource. They are now complimentary for you as a member of CPA Australia. Members who attend these sessions get really great value out of them. We get really great feedback off them. If you're looking to actually enroll in these webinars, and they are monthly, as I said, if you go to our CPA Australia courses and events section of the website, and then actually put in the tax search engine, or if you go to the tax toolkit page that I showed you earlier on in the slides, there is actually 2 tiles on there that you can click directly on the tax update or the special tax month topic, and you can go through and register. Now, just a little note, when you come onto the page, you'll actually see that the cost is still on there. And there is in some red writing just a reminder that it is complimentary for members of CPA Australia. So you do have to log in. Sometimes there's a little bit of a quirk in the system that even if you are logged into the CPA Australia website, when you come through onto the learning platform, sometimes you do have to click it and log in again. So if it's coming up that you've still got the cost in there, go through until you get to the checkout. If the cost is still showing, just make sure up in that top right hand corner that it actually says that you're logged in and it's not saying login. If the cost is still showing, hopefully if you click on that login and put your member details in, the cost will go to complimentary, and then you proceed to check out like you do in other resources, and then it'll come through in your My Online Learning through your CPA dashboard. So in addition to the monthly webinars, there are other workshops and quarterly tax updates that are available. And some of these are in person. So I know we have some in regional Victoria coming up, as well as Darwin for those members who may be joining us from Northern Territory. So if you're looking for something in person or for some other areas and quarterly updates of some of these sessions, you can also jump into the tax area of that website, and that will give you all the tax support that we have in this space. Now, just finally, don't forget, as a member of CPA Australia, there are a number of library resources that you can also access. You do need to have an account with the library with CPA to actually be able to access them. But as you can see, there's a range of really important resources. The Master Tax Guides have always been really, really popular, for example. You can access these online at any time as a member of CPA Australia. So please don't forget to utilise all these resources at your fingertips. Now that actually concludes the presentation for today in terms of the formal content we're going to run through, which is great because it leaves us some time to actually start going through some of the questions that are being asked by members. So I'm just going to kick off with a couple of these, and Simon or Alan, I'll open it up to both of you, and you may both want to comment depending on the question. Some of these I know that have been answered in the chat, and I thank you to Samantha, Jimis and Andres who are on there and supporting. But to start with, what kinds of records are needed for the tax return deductions? Are payslips sufficient, or do clients need to provide bills across the period?
Jump in ahead of Simon. Oh, he just put his camera on. Over to you, Simon.
No worries. You certainly should be keeping pretty much as much information as possible regarding purchase and sale amount when it's being converted as well. So you need to have as whatever your records you're extracting from your platforms and have them on file. You need to, and then corresponding to your any FX, any rates as well. But you just need as much as possible there. I wouldn't say you should have a minimum. You should have as much as possible.
And just further to that, for individuals, for example, the ATO does have a My Deductions app, which interfaces with online services for agents. So if you get your clients to actually take the details of those receipts and actually record them in the app, then you don't have this whole reconstruction problem at the end of the year. And if they're doing that as they purchase things and as they use it, they can then upload it into your practice software or into online services for agents for you to then use, and it's all kind of there. Similarly, I know there are mixed views around e-invoicing, but the more that you're having these digital and electronic receipts that just go directly through the systems, it's all captured and there isn't this sort of manual review of things that's as necessary. So again, it's around how can you use apps and digital technology and educate your clients to help make these problems be minimised or perhaps even go away. Did you have any additional comments on that practices, I guess, Simon, in terms of what you've seen as good practice?
Yeah, just as much electronic records as possible, Eleanor, that I've seen regarding any of that sort of thing. I mean, the thing is, we know it's relatively easy to obtain as much as possible. Regarding crypto, it's a bit more tricky, but it's just keeping those electronic records on hand as much as possible should be the best way to go. Then there won't be a problem, because at the end of the day, if there is a query from the ATO, using any of those guides by the ATO will certainly leave you in a strong position if you do have a question from the tax office.
Simon, that's a great little segue because I heard you say the word crypto in there, and that relates to our next question. And there is a question regarding what are the records required for cryptocurrency gains and losses?
So similar, to be quite honest, I haven't done a huge amount on crypto, and it's certainly something that Eleanor probably knows more about than me. But you know, keeping all those records, because that where it's traded through your different platforms, I would have thought would be the best. Eleanor, do you have anything additional regarding crypto?
Yes, so the ATO is working with cryptocurrency exchanges. So much like the ASX keeps details of who's purchasing things at what price and things like that, that's actually all going to get sent to the ATO and matched against tax returns. What that means is that that information should also be available to your client. The biggest challenge is where it's direct. So I sell Simon my crypto and we don't go through an exchange and we just match the keys. The ATO has indicated what they'd be looking at is, for example, the transfer of money. So what was exchanged and where's the record of that? Because that essentially forms your cost base when you dispose of it. And they've also indicated that, all right, Simon might buy it from me and it might be off the system, but then when Simon goes to sell, he might put it through an exchange. And that's when it will hit the information gathering space. So I do talk about a digital footprint. And there are examples with the Russian ransom people. The government can actually go in. They're not as anonymous as you think. So really it's around, if they've gone for a cryptocurrency exchange, it's like the ASX, they should have that kind of information available. And then if it's off the exchanges, you need to have bank statements and things like that. You can also obviously deduct expenses incurred in investing in cryptocurrency, and you want to have those details as well.
Thanks, Simon and Eleanor. The next question is regarding international suppliers and their invoices. Is it essential for them to specify their tax numbers on their invoices, similar to ABN in Australia? What do we do if the tax number or TRN is missing? Can we still claim the amount as a deduction as long as it's business-related expense?
I think Jimis gave a good answer to this one, which basically said, yes, you need to have the documentation. I think what's interesting about this question is it does raise the issue of cross-border trade. And while it's not income tax, a range of jurisdictions, so we've got GST on low value imports and things. Singapore's about to introduce it. The UK VAT rules now have no low value threshold. So for those clients that do actually trade globally and have interactions with other tax systems, as their tax agent, it may be worthwhile raising the potential for international income tax issues. So again, with crypto, if you, or even like exchange traded funds or overseas stocks, if they're going through exchanges overseas or they've got a connection elsewhere, there may actually be some tax obligations overseas associated with those investments. And similarly, if they're trading and exporting to other countries, they may actually have VAT or GST or indirect tax obligations. Some of them are managed through online platforms, so eBay or Amazon might do that for you, but for others who are transacting directly with customers, it does raise this broader issue about, you know, how good is the bookkeeping and the records that you're receiving from your international partners? What kind of tax implications might that have, not just to do with Australian tax? I don't know, Simon, if you had any additional thoughts or comments?
Yeah, I agree. I mean, in terms of having the overseas tax numbers, that's obviously up to that country and regarding their specific invoicing requirements. I mean, we can't really dictate to an overseas supplier necessarily what they are required to put on an invoice. However, we obviously know that if they're importing or whatever, and there are going to be specific requirements, then we will be, as our clients will be required to ask for that information, of course, as much as possible. I guess as for practitioners, we've just got to ensure that and working with our clients, that those invoices are legit, and that any of the VAT and the value-added taxes are also accounted for correctly. Also, I think what's important with invoices, overseas invoices, is just ensuring that that we are classifying that as being correct, because there are sometimes we need to make sure that things aren't caught up in any royalty payments and any TFN withholding obligations as well, which is really, really important.
Thanks, Simon and Eleanor. The next one has been directed to yourself, Simon, saying, could you please explain an instant asset write-off rules for small businesses that have been with simplified depreciation rules?
Yeah, sure. So regarding this, so with the simplified depreciation system, so the full cost of the eligible depreciating assets, they has to be fully installed before the budget time and 30 June 2022. So and then the second element of the cost is the existing eligible depreciating assets that have incurred during this time. So regarding your actual pool, what needs to happen there, the balance of that general business pool will need to be basically written off between those years, unless you're going to opt out of it during the year. If you do opt out, but anything that was already in that pool will have to be written off under the TFE. You can then obviously, you are able to opt back in, but if anything was in a pool and the TFE will apply to that pool balance.
Great, thanks, Simon. There's a question asking where you can find the templates and the work papers that I referred to earlier in the resources section. So again, if you go to the CPA Australia homepage, on the top left-hand corner, you'll see a navigation button. When you click on the navigation button, the tree of different options will come through. If you click on Tools and Resources, then you will see a next set of tree comes up and you'll have taxation. When you click on taxation, that brings you to the tax homepage, and the top left-hand tile at the moment says 2021 tax toolkit. And when you click into that one, that'll take you to all of those resources that I spoke about. So the work papers, the client letters, and templates will be in there. And as I said, those other letter templates will be available from early next week as well. So if anyone's having any queries or trouble with that, please don't hesitate to contact us, but you should be able to get it straight from the tax homepage. There's another question in here saying, now that assessment notices are available electronically, do we need to keep physical copies? Also, what is the current view of signing tax returns electronically via DocuSign or Adobe PDF?
From my perspective, we've been accepting that, certainly, because the audit trail, particularly on a DocuSign, is one of the greatest things with DocuSign. I think that what COVID has certainly taught us is that there are certainly quicker ways of executing documents and also they can be admissible under law as well. So I think that certainly that's certainly no problem from our perspective. Eleanor?
I agree. I've heard from members as well that, you know, it's an interesting thing because often there's lodgement and payment issues, and so they tend to have a process where until that thing is signed and paid for, it won't be lodged. And I think that whole audit trail and being able to do things electronically is really, really efficient, but also gives that assurance to the practitioner. In terms of keeping physical copies, the ATO has actually, and the government is actually trying to move into the 21st century. They are quite clear in stating that electronic is fine. It includes things like authorisations and things like that. In terms of keeping physical copies, the only thing I guess to be mindful of is should you cease to be a tax agent for somebody, you obviously will no longer have access to their accounts, whether or not there's any need to have physical copies of past tax returns lodged on behalf of clients. That's your call. But really, the less paper we can all use and the more efficiently we can store and do things, I think the better.
Thank you, Eleanor and Simon. There's another question saying, I've started a very small scale e-commerce business in January in 2021. Do I need to register for an ABN?
Yes. the answer
yes.
to the question, because you have business there.
Yes.
Go, Simon.
Yeah, sorry, Ellen, absolutely. The only thing that really the threshold kicks in will be the GST, and obviously if it's small, you may not be over the 75,000 turnover at this stage, but hopefully you will be soon enough.
Great. I'm just looking through these next questions. What would be the record or process required to access the benefit for accelerated asset depreciation if simplified depreciation rules were applied in the past years?
I thought we may have already covered that, but in terms of what records, well, the records would be what you generally keep when you were preparing your fixed asset register at that particular point in time. I assume I'm a little bit confused on the question, but yeah.
No worries. So just to let everyone know, we are taking a copy of all these questions in the Q&A section. So any that we are unable to answer today, we will be able to get back to you and let you know the right answer. There is a question regarding the detailed checklist. So in the past, for those who've been using our tax toolkits for some time, you will have seen that we have had quite a detailed checklist that you work through. And the reason that it's quite lengthy is it has all the commentary in there to talk through the different steps and what you should be looking to do in each of those sort of checkpoints. What we did in 2020 was actually have a basic checklist, which takes out all of that detail and information. So for the checklist that you'll actually see on the website available now, there is a basic, which is without all the commentary, and a detailed checklist for those who still want to go through and have that, that guidance in there. And hopefully that makes it a lot more efficient for those who just want the basic checklist to work through and have that as your documentation. There's a couple of questions regarding...
just on that, Katie,
sorry,
I was going to make the comment that the individual tax return instructions published by the ATO run at 400 pages. The reasons that the checklists are so in-depth is because our tax system is complicated, and obviously for all of our members, your clients are going to have a variety of issues and circumstances that we need to cover. Having said that, if you've got particular client bases or client issues that you tend to focus on, these things can be tailored to your needs. The caution, of course, is the simpler, and we're having this discussion with the ATO about their website content. The simpler you make it, the more gets left out. And as a professional, you need to know all of those nuances and actually work your way through some of the challenges that client situations can place you in. And I think that's where, you know, we all struggle with that balance, how to keep things really clear and effective, but making sure that your clients and you have the support that you need to make sure that things are covered off properly. With the ATO, you know, we're saying to them, you know, some of your content is neither good for taxpayers because they don't understand it, but it's not detailed enough for practitioners to really get to the nuts and bolts. And I think there is this challenge with the complexity and volume of tax laws, just how do we make it accessible? Because 400 pages for an individual tax return is not accessible. 39 pages, I reckon we did pretty well. But getting it down to 2, my personal view is that you'd be missing something, that there would be risks with using such a simple checklist, unless you had, you know, even for work-related expenses, you can probably run it to 2 or 3 pages of questions. So, you know, finding that balance, it's good to hear your feedback though. So if you do have suggestions about what you'd like to see, I'm sure Ketty would love to hear about it. And yeah, we'll definitely think about what we can do for you next year. Back to you, Ketty.
Thanks, Eleanor. And I think if we've done 39 compared to 400, then maybe we're going okay. We did have a question before about the electronic signatures. There is a follow-up question asking, can we use overseas e-sign providers? I'm not sure if we've got any knowledge or insight on that one.
I'm not sure. I assume that they're obviously similar, got similar properties to that of DocuSign. I think it would depend. You'd have to, as practitioners receiving documents, just have to, I guess, check out the software in terms of its eligibility. I think I'm sure it's probably okay, but I'm yet to see one. I mean, Adobe in its own right's not actually Australian, so.
I think as well the TPB does issue guidance on outsourcing. So it's not outsourcing of the service, so that might not necessarily be directly related, but it essentially is around cloud computing. You've got those obligations again if you're using, you know, interfacing with that. You've got things around cybersecurity and mitigating risks, but there isn't a clear, you know, you're not allowed to go overseas for things. That would be quite anti-competitive. I think really it's around, like Simon said, understanding what is involved, what kind of information they have access to, other security protocols, right? Can you manage any sort of risks associated with those particular contracts? And yeah, if Adobe's okay, and that's an offshore company, Xero's New Zealand based, isn't it? So we use international partners all of the time. It's about you, I think, doing your due diligence and making sure you're managing the risks as a practitioner. That's the most important thing.
Thanks, Al. There's a query saying my client did not receive a proper tax invoice from their subcontractor for maintenance of their rental property, only a text message of the receipt. Is it acceptable for him to claim a tax deduction?
Well, there's supposed to be an ABN obviously listed on any sort of invoice issued. So I would say I would actually go back to that subby and sort of say, why can't I get a proper invoice? Because obviously we're heading down a real interesting sort of path of why one hasn't been issued, to be honest.
And I think that there's a broader issue around black economy and reporting. So the ATO will look at both sides of the coin. So you've spent the money, but you don't have a proper invoice. Why should you get the deduction? There's this idea that, you know, and right or wrong, there's a presumption, like Simon hinted at, that there is no tax being paid on that income. So why should any deduction be claimed? It's part of when you're paying for something, it's part of your responsibility because you want to claim it to ensure that you receive the receipt in a way, or the invoice in a way that you can deduct it. The other thing as well in maintenance, like it's not quite taxable payments reporting system for construction subbies, but it's going to that thing around how to connect the dots and make sure that people are doing the right thing. So I don't think the ATO would have much sympathy for a claim, or the subby wouldn't give me an invoice. It's really around you should actually be getting that. That's on you if you want to claim the deduction.
Thanks, Al. There's a couple of questions in here talking about CPD and structured reading, and it talks about CPA Australia and the ATO. I think it might be the TPB that would be looking at that from a registered tax agent perspective. I know that we did have some changes to our policy in 2020, but I'll have to check for that person, Andrew, if we've got that for 2021. So we'll come back to you on that. But Eleanor, do you know if the TPB have issued any guidance specifically around CPD and requirements? Great.
So they have lifted the cap of 25% technical professional reading activity until 31st of December 2021. As I recall, their last discussion paper was around having, I think it was 120 hours averaging over 3 years. So again, depending on how they end up settling their position on CPD expectations, you know, you want to get all your reading done by 31st of December, because after that, then the cap will come in. So again, it's just, that's what will be available. I wouldn't anticipate that the TPB would extend that any further. And they are sort of looking obviously at their policy going forward as a result of those exposure drafts.
Thanks, Eleanor. There's a question on here asking about restrictions and essential work, and specifically, I know for those of you who are in Greater Sydney at the moment and those restrictions around lockdown, we have been updating our guidance on the COVID section of our website. So again, in that tools and resources section, when you open that up, if you look right towards the bottom of your list of options, you will see COVID-19 resources. And on that page, we're doing two things. One, we're continuing to link to information around restrictions and requirements. And two, we're providing information on different grants and financial support that is available through both state and federal territories. For those of you in New South Wales, you would have hopefully seen that there was quite a raft of support measures announced yesterday by both state and federal for both individuals and also multiple support for businesses. We are actively monitoring and engaging with the New South Wales Government to get the detail of some of those requirements and grants, because there are specific eligibility requirements, and we understand there will be a requirement for tax agents and BAS agents to provide a level of declaration around the decline in turnover to be eligible for those. As soon as we have that information, we are planning on doing a dedicated EDM out to our members in that area with a public practice certificate, but also putting that information on that resources section of the COVID-19 part of the CPA Australia website. So continue to have a look on there. I know in terms of restrictions that there was an ability to work from the office provided you couldn't work from home. QR codes were in place, masks were in place, and social distancing. I unfortunately have not seen today's announcement if there's been changes to that, but we will update that guidance for you, because I completely understand. It's very challenging to read and understand what is required for different sectors. And so we are trying to provide that information as timely as we can for you. So please continue to look at that area. And of course, always reach out to us if you're looking for some more detailed guidance or specific requirements. There have been a few more questions just coming through at the moment. So someone's asking about registration for the tax updates for those webinars. Again, two ways. You can either jump straight onto the tax toolkit page, so CPA Australia website, tools and resources, taxation, and about a middle of the page you'll have 3 boxes that'll come up: monthly tax update, special tax update, and the third one escapes me at the moment. I think it's our SMSF update that comes through, which is another new complementary one. Otherwise, go to the learning and courses area of the website and look at tax, and all of the options will come up there, and you'll see those boxes there as well. We've got another question in here. Someone's asked, someone said, so there's no cap for the TPB for 2020 and 2021. Eleanor, maybe just to reiterate that point around CPD?
Said much better than myself, yes.
Great. Someone has asked, can a business of renting properties claim depreciation using temporary full expensing? Does depreciation asset lease still apply under temporary full expensing rule?
Yeah, the quick answer to that one is no, because if someone's in the business of renting properties, they're not actually in the business, because they're actually investing in properties and generating passive income, so they won't be eligible for the full temporary expensing measures. So they'll be under their general depreciation rules, unfortunately. I think the ATO and the government have already tried their best at curtailing people on rental property deductions. So I certainly think that, unfortunately, that won't be changing. The whole point of temporary full expensing, just to get back to its original purpose, is to generate assist businesses in the economy, to kickstart the economy, so to encourage capital expenditure within businesses, not on passive assets.
Thanks, Simon. Eleanor, just checking, had nothing to add to that one?
No, I think it's a challenge, because looking through some of these comments, it's really around people coming to their tax agent at tax time wanting to claim things, or thinking that they were entitled to something that they weren't. And I'll go back to my earlier comment that it's probably all a bit too late, and it's about establishing good habits. So if you're a rental investor, you need to make sure you get an invoice, and that you're not coming to your tax agent with an SMS and an email saying, is this good enough for a claim? It's really about educating taxpayers to make sure that they're setting themselves up in the right way. Similarly, a residential investor, they might have thought that they could do it. They've gone out and spent all this money, and then they can't actually claim temporary full expensing. It's going to cost them. Or the outcome will be different to what they expected. So I think as practitioners, it's a real challenge, but how do you actually communicate to your taxpayers what they need to do, so that there are no surprises when they walk in your door at tax time? The onus isn't on you to find a way to claim something that you can't really claim, or you don't have the records for. It's around, how do you get them to develop the processes and systems so that they can come to you and make your life and your tax time and their tax time run really, really smoothly. And I've been in this role at CPA Australia for a couple of years now, and the more I sort of evolve in it, I think it's around actually preparing and looking ahead. I think historically tax time has been very retrospective, but the benefits and the really positive experience that I hear about is when a tax agent builds that trusted relationship and can actually communicate in real time as things are happening with their clients, to say, if you want this, we think this applies to you, or this might affect you, here are the things that you'll need to do, you know, in 9 months' time when you come to do your tax return. And that's where that relationship of trust and value add actually evolves. And the more that you hear these stories, people do things and then they go to their tax agent and it's like, you can't fix it anymore. And how you sort of can modify the behaviours of some of your clients and get them to understand where the value is, I think that's a really important thing. I don't know how you approach it, Simon, at Moore, but yeah, just having those early conversations, real-time engagements. Do you think that's not a bad approach?
Absolutely. I think, you know, in terms of you know, we've been discussed some of the checklists and things like that. That's what we need to explain when we're communicating with clients, is that, yeah, those checklists and some of those things are really onerous, but we're also, our job as practitioners is to ensure that they are compliant. So, you know, if there isn't, we hope it doesn't happen, when the ATO do knock on the door, that we are fully prepared and have all the information available to be able to satisfy and justify the position that we and that you as a client have and that the clients have taken in terms of what they've lodged with the tax office. So absolutely, I agree.
Thank you, Simon and Eleanor. There is a question in here, and I'm not sure if you've seen it, around, we know the TPB issued guidance around understanding where your software provider or any of your online providers store your client data. And there is a question saying, is there an opportunity for CPA Australia to have a conversation with the TPB, because there's obviously thousands of Xero users and MyOb and other users, and as opposed to a handful of software providers. So I think that's some constructive feedback, and it's certainly something Eleanor and I can discuss and have a conversation around. Elle, did you want to comment on that?
Yes, I won't admit to having identified the question, but more generally, it's not, our approach is it's not for the government to prescribe who you can use and what kind of things should be available in the market. They don't control the market. So we do believe that, you know, as practitioners and taxpayers, you should have access to services that are provided in a competitive regulated marketplace. You know, there should be certain standards. So what you will hear from the TPB will never say use Xero and not MyOb or MYOB. You know, they're never going to get to that level of prescribing something, and they're never going to point out who they think is great, nor are they going to point out who they think is not good. That's why a lot of their guidance is principles-based. They talk about know your software provider, make sure you mitigate risks. And, you know, we do talk to them about it. I'm now the external co-chair of the Tax Practitioners Board Standards and Governance Forum. So we are going to start to talk about things like that. But we are very mindful, the practitioners, and we really emphasise this with the TPB, that practitioners should exercise their own judgment. They should have access to various options, and it's not for the regulator to say this is what the marketplace for a certain service should look like. And that's a really clear tenet of ours. What we want is to enable practitioners and tax agents in particular to offer the best service at the least cost. So certainly, like Katie said, we continue to try and say, well, where are the lines? You know, what does look like a good provider compared to a lesser provider? But at the end of the day, there is that judgment that needs to be exercised. And we think that that trade-off is worth it because, you know, a competitive marketplace means the best products. And look, happy to discuss it, happy to hear from members about different views. We do hear, you know, we just want the TPB to tell us what to do. And I think with principle-based regulation, you know, you're really looking to explain sort of the outcome. The outcome is that things are done with protections, that they're not stolen, you know, that you're mitigating the risks, that things are less likely to happen. And that's really sort of where the TPB will focus. And that's where we ask them to focus.
And Eleanor, just on that, just so CPA members are aware, we are actually doing some work at the moment in the cybersecurity area, because we know it's a really important area that you have very important personal information of your clients. And we also know that it's an overwhelming area because there's so much information and different things to be across. And, you know, all of these things like your software providers and other decisions that you make will feed into your strategy around protecting and addressing your cybersecurity risks. One thing that was actually brought to our attention was, if you actually go through and read the license agreement with some of the software providers, you may actually be surprised what their role and responsibilities will be, and what your responsibilities would be in terms of keeping client data protected and ensuring that you're not going to be exposed or potentially a victim of a cybersecurity attack. So I would actually encourage you, I completely take the point about doing the due diligence, and Al, it's a really good point because you do need to have that comfort. I'd actually encourage you, if you haven't, just to go back and read your license agreements with your software provider and really understand what those roles and responsibilities are. Just again, it's really important as part of your due diligence, but just also to make sure that there's no surprises in there that you weren't aware of. We've probably got time for 2 more questions, and I know there's more than 2 more left in here. So as I said, we are taking a copy of these, and we will look to do some further publishing of these questions. Someone has asked, does an ABN business where you are the only one providing accounting or bookkeeping service, should this be treated as PSI or business income in the income tax return?
Yeah, sure. So there's a lot of different components here, and this is a case-by-case basis a lot of the time with this. So obviously, the business will depend on if there are any employees involved and the type of clients there are, and obviously looking back at the PCG and how that works, if you are considered an IPP or whether it's just straight PSI. So there are a few different components there. But the likelihood, if you are a sole practitioner, literally as a sole practitioner, there's more than likely that you're going to be under the PSI regime.
Just on that, I think if you work your way through that draft ruling on PSI, and sorry, if you're a sole practitioner, sole trader, it's all taxed at your individual level anyway. If you're working through an incorporated entity or some sort of trust structure, I did find that ruling, and it's the same as the old ones, but it was quite helpful in terms of where do you get your business from and all the rest of it. That's the challenge with PSI, that it is case by case, isn't it? And it depends on how you actually generate that income, whether you're a business or whether you're a PSI, I think. And again, that's what the ATO is observing people getting caught out on, that they're just not necessarily realising what the PSI rules actually are. So go read the ruling and work your way through it, and you'll hopefully get the answer.
So Eleanor, this may be a similar response then. For a TPAR construction business, is a subcontractor just those paid for building work completed, or is it plumbers, electricians and other sub-trades as well?
I'm not going to, maybe Simon and his team might have a specific answer. I think it's by industry code and things, but I can take it on notice unless Simon has the answer.
Yeah, it is by industry code, but it's pretty much, as a construction business, it's pretty much all those things that were listed there. So it's now been expanded, the TPAR system for subbies. So, you know, it's pretty much for anyone who's on an employee these days.
Great. Look, we literally have 2 minutes left to go of this session, and we just do need to do a few final closing remarks. So first of all, I'd really like to say sincere thank you to Simon and Eleanor today for their insights, expertise, and going through and answering as many of these questions as we can. I'd like to thank Simon's colleagues who have been supporting us in the background with some of these questions and answers. And as I said, we will be taking a copy of all of these and making them available. So keep an eye out for that. You will get a copy of the slides as well as a copy of the recording of this webinar in the next few days. So that will come through. I'd like to thank Dale for opening our session today and introducing the session, as well as Louise for joining us from our board at CPA Australia. And with that, I'd like to thank everyone who's actually joined us for the webinar today. As you can see, there's so many things that we could probably stay on for the rest of the day and talk about on these issues and come up with questions. So it's really invaluable to have opportunities and have experts like Eleanor and Simon and his colleagues to help us through these times. Don't forget to jump on and look at the tax toolkit. Don't forget to register for those monthly webinars. And we look forward to seeing you at another CPA Australia webinar very, very soon. Thanks for today, and back to you, Chloe.
Thank you, Ketty, and thank you, Dale, and to our presenters, Eleanor and Simon, and thank you to everyone for your participation today. In the next 3 working days, you will receive an evaluation survey accompanied by the recording of this webinar. We also really appreciate your feedback, as it is extremely valuable to CPA Australia to help us deliver better events for you. Thanks again, and we look forward to welcoming you to another CPA Australia webinar soon.